Guys, so I'm here again with another video. I know I've been off again with it, with the videos, but the thing is that I needed that break for me to get my light bulb moment, right? For me to get my light bulb moment. And the reason why I've been away is that I've been putting work in my craft and then figuring out for myself how best I can go about this trading thing, right? And then just recently, my mentor Ali Khan, is an ICT trader. I'm an ICT trader. I've been trading dealing ranges, and I've usually been using the 25, the 50, the 75, and then the 100 levels, right? In my trading, in my analysis, and I've sometimes tried to add some support and resistance levels and all of that, yeah. But now I've been able to find a way to put them together in a manner that helps me predict price very well, and that's what I've been working on as I was away, and it's better now. It's more refined. It gives a much higher accuracy, and I'm glad I stuck to just this one style of trading. And I have to say a big thank you to Ali Khan for all the gems, all the knowledge he has been sharing with the community, all that he has shared. And I'm able to do all of this just through his free content on YouTube. And so if you guys are interested, you can also check him out, see what he's doing there. Amazing work from the man. So without further ado, let's just go in here, and then you're going to find a lot of value from this video. So we are on Euro USD at the moment, and we are on the daily time frame, right? We are on the daily time frame. Now what I've done here with these levels is that from the 50 to the 0, we consider that as discount, and from the 50 to the 100, we consider that as what? Premium. And one thing Ali Khan said in his teaching is that inside this discount, or inside that premium, we can further divide them into premium and discount, meaning we could have a premium, right, in discounts, and a discount within discounts. Simply saying a discounted premium and a discounted discount. I know it doesn't sound good, but that's what it is. And then inside premium, we are going to have a premium inside a premium and a discount inside a premium. And so what I did was I found the difference between, or the middle ground, the center of the 25 and the 0, which is 12.5, then the middle of the 25 and then the 50, which is what? 37.5. So essentially inside this discount, this 25 becomes the middle, right, between the 50 and then the 0. The 25 is the middle because half of 50 is 25, right? Good. And so this part becomes the premium of the discount, and then the lower part becomes the discount within discount. And then from the 50 to the 100, the 75 also becomes what? The middle of that premium, right? And then the 62 becomes the discount of the premium, and then from the 70 to the 50 become the discount, and then from the 70 to the 75 to the 100 becomes premium. And so that is everything we need. And I decided to, when I put these levels on the chart, the accuracy is crazy. The accuracy of these lines is crazy. The accuracy of these lines predicting the price move, giving you directional bias, is crazy. Just using them as support and traditional support and resistance is crazy. And you're going to find out in this video and subsequent videos that all the PDRs, all the major PDRs, the major liquidity pools rest around or at these levels. They rest around and or at these levels, and so they help you with your directional bias, telling you where you could get in, where you could put your stop loss, where you could take your profit. It helps you with a much higher accuracy. So now, without further ado, let's just go into the 4-hour and then finalize things up. I've got about 7 pairs for you guys. Massive moves coming into the market in the coming weeks, people, so you better catch on to this. I'm not joking. This is no hype. Okay, so let us go into the 4-hour. And then see something here. Okay, so now we've already established the dealing range on the daily, right? On the daily. So there we are. So the high to the low. Now, just to make sense of what we have here, look at this. When I was saying it helps you with insane accuracy, the moment we tapped into this fair value gap on the left side and then formed this low, breaking above, right? We had our low established, our high, so we have our dealing range established. Now look at the 12.5. okay, let me try and get this thing. Okay, let's just do it this way. Let me take it off because I want you to see the levels for yourself. I want you to see the levels for yourselves so that it wouldn't be like I am saying. Or good. Now look at this. Now this is the 12.5. we moved up into where the 37.5, right? And at the 37.5, what do we see? We see this inverse fair value gap to the left. We see this volume imbalance right here. I hope you can see here this inverse fair value gap, this volume imbalance, this bearish order block. Price taps into it. See that? Look at the reaction of the candles right here. Reverses into what? Back into the 12.5 dealing range level, where we have what? This fair value gap. After that, see how price moved up, breaking above the 25 dealing range level, leaving this fair value gap. We tapped into it again, referring to this order block here. See how price touched it, moved away, came back into the 37.5 dealing range. We have this order block right here. See how price taps it. See, look at the wick. It just taps the tip of it and then it runs away into premium before we see this rejection down, taking stops here. Look at this, please. Look at the bodies of these two candles here. Equal. That's where the bulk of the volume lies within the candle, right? Then we take it and then see how the bodies lie equally with these lows, right? With the lows of these two candles. So we sweep liquidity below this one and look at where price stands right here, just at the same place again, and then see the move that came in all the way to the 75. So we run through the 37.5, we run through equilibrium at 50. See how it holds price. That's what I'm saying. The precision with these levels, with the dealing range levels, is crazy. We moved up to the 75, came in back into it, then we've tapped into a key level here, and then we are reversing. Okay, we are currently reversing. Now I would show you where this reversal is coming from. Look at where the reversal is coming from. What sits here at the 87.5 level? A bearish order block. A bearish order block. So we have tapped into that bearish order block, and then we are trading downwards. Now to refine our entry in here, because with the way price is moving, it gives us an idea that we might be targeting lower prices. I see this in here, this low inside the 50% gap, and I'm thinking that we might want to run lower, take these stops before we see any form of upward movement. And the thing is, we could actually even go lower into the 37.5 because there's a gap here at the 37.5 level. But at least I want to see price get to this level where we have this order block which aligns with the fair value gap, and even that gives us a 1:2 trade. Now moving into the 1 hour, to make things clearer for us. Once all of these have already been established, we've seen that once we traded below the 75 DRT level, we disrespected this fair value. There's a tiny fair value gap here. We created this fair value gap on the side, so essentially we have a BPR. Price traded into it and then dumped to the 62.5 level. We left this fair value gap, okay, and price is currently rejecting from there. So all I'm waiting for on this setup is this: price comes down, breaks this 62.5 level, and then we want to see resistance at the 62.5, and then price does what? Moves down to the level I already mentioned, to the level I already mentioned, right? And so this is what I want to see with Euro USD. That already gives us a 1:2 setup for the week. So this, that, and then we can anticipate that price will move. So we are rejecting from this fair value gap. I want to see us break this low, which will give me confirmation that we have a better chance of a higher chance of trading downwards, and then we can take advantage of this trade. Okay, so now we just move on to the next pair. Let me just change the time frame and then we can go on. So the next one is USD CHF. Now USD CHF. With USD CHF, we are going to start on the weekly chart. Okay, we are going to start on the weekly chart. Now, okay, I think we ought to go to the 1 month, the monthly chart. Good. This is it. This is what I want to show you guys. So on the monthly chart, I'll just enlarge this so that it becomes more appealing, a bit appealing here. So becomes easy on the eye, I meant to say. Good. Becomes easy on the eye. Now when we look at this on the monthly, you see that we have our daily range from this high to this low, and then look at how price has traded within the range. We pushed up through the 25 DRT level, we left this fair value gap, we did not come back to it immediately, traded up to the 62.5, and then price traded down where to the 37, moved up again to the 62, dropping lower, clearing stops over here into what? Into this guy, the 25 DRT level, and this other block right here. There we see this reversal back into premium above the 62. We consolidate here a bit, right? We do consolidate here before we drop, moved up 62.5. Look at how the candles respect that level several times. 1, 2, 3, 4. We failed to break it before we dropped lower, and now we are currently at the 25 DRT level. Apologies for that. 22 DRT level. Now we are in discount. And so what I am anticipating is that once we are in discount, we should be looking for buy setups into what? Premium, right? And like I've already established in this video, from the 50% from here to here is discount, or you can further divide the discount into premium and discount, right? And so we could see that at the moment we are at the 50% of discount because we are at the 25 level, and just above that we see that there is a fair value gap right here. And so what I want to see price do is trade into the premium of discount where this fair value gap lies, and then we would have generated a pool of liquidity at this 25 level where we can see price run into the 12.5 daily range level. So the idea is that from here we move into this fair value gap, and then we dump, taking out those who have been bullish. We dump, taking out those who have been bullish, right? So this is the long-term idea. Now let us move into the daily. Let us move into the daily. So now this is where prices are currently, right? This is where prices are currently. Let me check something from the weekly immediately before we move on. Good. And so on the weekly, you're seeing that this is where the 25 DRT level is, and then taking that fair value gap, we'll be covering all of this place. So you see that over here there is what? A fair value gap close to the 37.5. There is this order block as well, right? And there is this order block as well. So this is basically what I will do. So basically we'll be looking for longs into this fair value gap before we look for the short into the 12.5, because look at how price is generating this pool of liquidity here, right here. Okay, and so we'll go into the 4 hour. To establish something good. So now inside the 4 hour, let me get this right. Now this is the fair value gap. These two lines are the fair value gap on the weekly, close to the 37.5 daily range. Now let me enlarge this so that it's easier on the eye. This looks plenty. Now on the 4 hour, this is what we've been able to establish. There is a high here and the low there, so that is the range I have drawn. Now when we look at this, we'll see that at the 25 daily range level, we have left this fair value gap and then this inverse fair value gap, so that gives us BPR, and that is what I have stretched out over here. Now we see that price is moving in a range at this moment, right? Price is moving in a range at this moment, and then this is the higher time frame key level, the monthly 25 DRT level. Now what I see is that we have left a pool of liquidity below the 25 DRT level. So what I want to see price do is that price finds resistance here, just like it's doing at the moment. We trade down to do a take out these people, sweep liquidity in here, and after sweeping liquidity, what do? We run up, and already this is a 1:3 setup, 1:3, targeting just the 62.5 level in the 4-hour chart. But keep in mind that the overall thing we want is up here, to see price move up here. And this is a very good trade, a very safe trade to take. Should price actually come in here and want to go up, wait for the signals within here, then move up there. So if you decide to take all of this, that's a 1:10 trade, but I wouldn't. I'll let my TP be within this range here, or maybe here. But then, like I said, the 62.5 is a safe range, and then that's just what a 1:3 setup. So we're kind of having some form of accumulation, manipulation, and then we'll have our distribution. Simple as that. So we are range bound, we are accumulating, we've been here again. I want to see us manipulate and then distribute. That is all I want to see with this pair. Okay, so now that's it for the US dollar, Swiss franc, USD, CHF. Let me go change the time frame before I move on to the next pair. Okay, and then here we are on USD CAD. So now on USD CAD, this is what we have. On USD CAD, this is what we have. On the monthly, we've seen that we've swept these equal highs, right, which was the original range from here to there, and then we have dropped back into this. We have dropped back. Let me just just change the settings for this exactly. And then currently we can see that we are at the 62.5 daily range, and that lies within a fair value gap, right? And so what we want to see is that price pushes up into this fair value gap at the 75 level before we see price drop again. So we are on the side of the bulls. Okay, so let's just drop into the weekly and then get things going. So now just at the 62.5 where we are at the moment, we see that we have this fair value gap and then this order block where price has mitigated at the moment. And so what we want to do, this blue line here is where we want to trade towards, and that is the 50% of the gap we saw in the bearish fair value gap we saw in the monthly above the 75 level, which is this place. Okay, which is this place. So going into the 4-hour, this is what we basically want to see. Going into the 4-hour, this is what we basically want to see. Price has to tip its hand. This is the 62.5 level and the order block. the fair value gap and the order block. So what we want to see is price tip its hands to us, showing us that it wants to go up. So it basically want to break this level, possibly find resistance inside this fair value gap, push down into a fair value. So this will constitute what is shift in market structure, drop back into a fair value gap, a breaker or something, and then we want to find support for price going up into the 50% of the monthly fair value gap. Then this already is a 1:4 setup. All right, then that's what we want to see on USD CAD. Straightforward. Now onto the next pair. We got to move because it's becoming a lot. So on gold, I'll just stay on the 4-hour chart so that we get things rolling. So now look at gold. From this high to this low is our dealing range. What have we done? Traded above, tap into the 12.5 level. So look at the bodies, the fair value gap here, the inverse fair value gap, traded above. Look at how we found support at the 25-day RT level. We moved up, came back into the 37.5. We moved up, then look at where we rejected from before we came down at the 75.75 level. There was this order block here, and then this gap as well. And then when we extend to the left side, you see that there's a tiny gap here as well. So that was a strong level of resistance, right? So this is the purest form of support and resistance you can have. Look at the 62.5 level. We have this gap here. Look at how price is holding at that level. See, and look at the PDRs that are forming at that level. Look at how price is respecting that level. Look. So the moment we trade into it, we trade down, we broke the 62.5, and we are currently at equilibrium, right? And so what I want to see is that we trade back into this fair value gap, and then we run down, taking out this swing low into the 25-day RT level because of this order block, this 1, 2, 3 candles, the order block you see right here. Let me increase this so that, yes, 1, 2, 3, the order block you see right here. So we want to sweep liquidity below this low, tap into this first, then trade below into this guy, and then that is it for gold. Simple and straightforward. Okay, simple and straightforward. Now where do we go? USDJPY. So USDJPY, I would start with the weekly time frame. So that we get things rolling. Okay, so on the weekly time frame with USDJPY, this is what we see. Now this chart is a bit messy, but bear with me. So we have this swing high to this swing low. Price has moved into extreme premium, the 87.5, where we have this fair value gap, and has traded down into extreme discount here, the 12.5, and that we are seeing that price is unwilling to break below this level. Initially I wanted to see price go below because of this double bottom or equal lows that sit here. So I wanted price to actually break this and take this low, but at the moment price is failing. Price is failing when we have seen support from this 12.5 level, and then we are pushing up. Okay, so going into the lower time frame, going into the 4-hour, a minute. All right, I established this range So all of this price action is currently at the 25. Okay, now okay, before we go, okay, look at the daily. Look at the daily. Look at how price is failing over here. Tapped into the 12.5, rejected up, came back. It's failing to do it, to break below. We've broken above this candle, which now serves as our bearish order block, and so what we would like to see is a retracement into that, and then we target for higher prices. Okay, we target for higher prices. So now let's go back into the 4-hour to finalize this up. Okay, good. So now bear with me again. So this is what we have at the moment. So from this high to this low gives us a daily range on the 4-hour, right? To the low you're seeing gives us the daily range on the 4-hour. Now look at the order block at the 25 DRT level. We are failing to break through the 50% of that. See how we have disrespected this gap to the left, moved up. Now over here, what do we see over here? What is the information we can grab from this place? Now this is the high of the order block I marked on the daily, and I said we want to see price trade into it before we move up. We've broken above the 37.5 level, which is here, and then we have a fair value gap just beneath it, matching up with that order block, and so we want to see price tap into that and then move upwards. Okay, what else can we see? We have this low, right? This low right here, this high, okay, and then this lower low. It failed to take the low of this, so this candle here becomes our what? Mitigation block, which also lies with this fair value gap. Okay, also lies with this fair value gap, and then with this order block, which is coming from the 12.5, the daily order bullish order block. We have this gap here as well, and so with this it can even help you refine what your SL a bit more, because all of these confluences here, if price should want to go up, should hold price, this fair value gap, this order block, this mitigation block. So already there's a we have a 3:8, 3.2, 1:3 setup here, so you could throw your stop a bit more, right, so that you're able to risk less, but you can still leave it here at the 12.5 so that you have this good setup. So that is all we need at this point, right? And so you are seeing resistance coming in from this fair value gap. We want to trade lower into this place, and then we run higher, we run above. Okay, that is all. So that is all for USD JPY. Then we move on to the next pair. This is what NZD card. Now for NZD card, let us start with the monthly time frame. See what is happening there. So on the monthly, I just focused on this range, which would be more evidence should we move into the weekly, so that we get the proper range. Okay, great, fantastic. This is exactly what we want. So now on the weekly, we got this high to low giving us our dealing range. Now if you look at it, we've blown through what? The 12.5, the 25, the 37.5, and now see what we are doing here. We are consolidating, right, inside of this fair value gap. Where does it sit? At the 37.5. Look at this fair value gap to the left side as well, at the 37.5. between these 1, 2, 3 candles, right? We have displaced through it, giving us the idea that price is willing to move higher. Okay, price is willing to move higher. Price is currently stabbing into that. Okay, and so the idea is that we are going to move up from this fair value gap into premium, where we have at the 75 we have this gap, we have this inverse fair value gap as well. Okay, so now let us move into the daily first before we go into the 4-hour and see if we can refine things better. Okay, so now in the daily, this is what I was saying. So now this is accumulation, manipulation, and distribution with DRT, simple and straightforward. Okay, and then look at where we are seeking to take our profit at the 87.5 level, where what sits there, a fair value gap and an order block. But first, let's look at this. We are currently consolidating, right? And inside of with a consolidation, what would I like to see is a sweep of one side before we move to the next. Now look at the 37.5 level. What sits here? There's a fair value gap right here at the 37.5, and so we are accumulating. So accumulation, manipulation, and then what? Distribution to the upside 87, and that's a 1:4.5 setup right there. So there are lots of good setups in this video, guys. Lots of good setups in this video. So just take advantage of what I'm sharing with you guys. This is massive, and then you see the precision that this gives. Guys, see the precision. So it's just this simple, and you can go into the 4-hour to even refine your entry further, but this is where I'll leave it with, the NZD card. Okay, now this we have what, the Australian dollar, New Zealand dollar, that's AUD NZD. Okay, that's AUD NZD. Now let us go into the weekly first and drop down into the lower time frames, and then we see now on the weekly time frame, this is what we see at this point. Even if you've never watched any video on daily range, you should be getting some basic ideas of how we go about things. So this high to this low is our range, and then you can obviously see how price has been trading within that range. We've moved into this, traded above, kind of consolidated a bit here, traded into the 12.5. This order block has held, pushed up, price came into the 12.5. I want to get this thing right so that you see the levels. Good. I want you to see the levels for yourselves so that it becomes easier for you to follow what I am saying. Okay, so now this is way better. Great. This is way better. So you see, price is failing to close below the 12.5, pushed up, come back into the 25 DRT level, pushed up again into premium above the 62.5, and then at the 72.5 you can see that there is a gap here which I've already marked out. We have failed to do what? Tap into that gap. But look at what's close to that gap. What is this? Equal highs, where lots and lots of liquidity sits, and that is where the market makers would be looking to target. Right now, look at what price has done just here. Price at the 12.5 has traded into the 25 DRT level. You look at the 12.5, we see that this order block sits right here. Now when you extend that order block, you extend the tip of that order block. What has price done? Price has tapped into that order block, pushed up, Broken above the 37.5 DR level, dealing range level, tapped into this fair value gap. And so what are we seeing here? The next candle printing what? Bullish. And so ideally what we're looking for is to see price move up. Okay, is to see price move up and then target this highs. Let us go into the 4-hour and then finish things up right there. Let us go into the 4-hour and then finish things up right there. So inside the 4-hour, okay, inside the 4-hour, I'm trying to get this properly. Okay. So inside the 4-hour, we are maintaining the daily range, which we have already established. So from that low to the high, so what we are seeing currently is this. Price is consolidating, right? After pushing down, consolidating a bit, breaking above this level, which I would constitute as a change in state of delivery. Looks like when we've left this order block right there, those, let me shift this to the left. Let me shift this. So I think I made a mistake with something. Let me correct that, then we move on. Yeah. Okay. Yeah. Then we move on. Okay, that's great. So that's the weekly, right? This was the level we tapped into, so we are trading up and we want to see buys to the upside. Okay, and then this is, so now on the 4-hour, what would basically like to see is a signal that price is going up. Okay, it's a signal that price is going up. Now this is the level for the equal highs, and so we want to see price tip its hand to us that is going up, and then with any kind of entry model you can enter. Then it's already a wild trade, 1:11, but there's a huge, gap in here which you could decide to take. You could just decide to take your profit here, which would be a 1:3 setup, or you could just go for a simple 1:4. You could go for a 1:2 even with this, and then you'll be out of the market real quick, right? But then the ideal thing is we are going to hit this place. That's a 1:11. You will take your profit here. Before we get to that, you could take your profit here, you could take profit here, you could take profit here. 1:3, you can have a 1:2, but this is a wild trade, guys. Wild trade. And so I think this is the last pair. This is the last one. So guys, take advantage of what I'm sharing with you guys. If you want to predict price with much precision, and you are keen, you are open to learn something like this, go and watch Ali Khan's work, Dealing Range Theory. This will be so amazing. He doesn't add the 37, the 12.5, the 37, 62, 87. When I started, I didn't add these levels, but when I decided to add these, the prediction was much easier. And then you can adopt it if you want. You can just do it as you want, and you still have that precision with you guys. This is crazy. I'm telling you, this is crazy. The video is long, I know, but then the value in here is monstrous. Look at it, check it out, guys, and then take advantage of these setups. I'm telling you. So that was the last one, guys. See you in another video. All the setups come on your screen right now. See you in another video, guys. Take advantage of the setups I've shared with you. Make use of them. and then let's just cash out. Okay, till next time, stay safe.